Okay, today is Sunday. It's May 11th. It's 4:05 p.m. It's 5 minutes into the forex trading hour. For the past 2 weeks, I uh, traded small. Okay, I traded small, uh, which meant that if I lose, then I lose small. But if I have a winner, then I can allow it to grow, and then give me approximately about maybe 0.1% a gain. And so if I repeat that 10 times, that essentially turns into a 1% gain. And now that was the objective. That's the objective that I've employed. So while I was trading, I noticed that what I'm attempting to do is trading something called a gap fill trade. Essentially, it turns out it is essentially filling a gap, which means that there is a gap between support and resistance. Okay, so anytime there's a I'll repeat again. Anytime there is a resistance and support, okay, vice versa, depending on which direction I'm going, right? And so anytime there is a separation between the support and resistance, uh, for example, a range bound situation, right? It's going to be a toggling between the support and resistance. So what I've noticed is that there are cases where that support and resistance, it varies in the distance between them. And so one way to one way to maximize one way to maximize that that gap is to trade at a point where there is a substantial amount of separation created by a substantial move. Okay, a substantial move, essentially, for one example, is if there's a long base, if there's a strong base that occurs for a prolonged period, that means that it will most likely move in one direction, up or down, in a sustained amount of time. So that will create a big wide gap between the support and resistance. That support and resistance uh, is going to be wider based on the strength of uh, that breakout. Okay, it's a breakout with strong momentum. So what I'm attempting to do at this stage is to catch that move. It's like I suppose like seems to be so now that I think about it, it seems to be so familiar with it seems to be very familiar with um, essentially surfing. Okay, so people who take the amount of effort into climbing into a wave is essentially very similar, but the bigger wave it is, the longer the duration and the strength of that impact in that wave. So it's very similar to like Monday, where there has been like a couple of days of news to pile up prior to market open, which will probably cause the market to trend quite a bit on a Monday because the amount of impactful news uh, hasn't taken effect due to the couple of days of being held over from the market being participating in the market. so the impact hasn't been realized in the market, and so when there's a pileup of information, macro economic news, then the probability of the market moving more so than such something like a Friday, right? Unless there is a specific instant things that occur on a Friday, right? Which is like options expire and some other things that occurs that are a major factor in the impact of, for instance, the forex market or the securities market. So generally speaking, the most impactful trading hour is right after the weekend is over and the market opens up, like just like right now. Um, so So what I've noticed is that sure I could take these trades and I can expect to make about a 0.1% or point, and if things go well, maybe 0.2%, and then that will start to accumulate and it'll make things a lot faster. But what I've noticed is that there will be situations where I can take advantage of a substantial amount of move where the gap between the support and resistance is wide. Okay? If it's very wide, that means that versus this, that means that I gotta, after it moves a certain point, I need to exit. The trade completes, and the gain that I get is small. But if I'm able to hold on to something for a bigger amount of gain, that means that I don't have to take I don't have to take 10 to 20 trades in order to uh, reach my daily profit target. I can reach it with one or maybe two, okay, and exceed what my profit target is for the day when I get into the situation where this humongous wave occurs, such as a big wave usually occurs only when there is an earthquake somewhere. Really, some sort of like a storm or of some sort. There's a couple factors that causes a uh, big wave to occur. If I'm a surfer, right? If I'm a surfer, um, if I'm a surfer, then one of the components, one of the factors, there's a couple factors, which is essentially earthquakes will cause the waves to because apparently there's like a uh, earthquake waves occur like laterally, right? Not vertically, laterally. And so it'll start to buckle and things like that, like a wave. And it causes the surface water levels to take on that energy. And then it'll transfer into creating this huge wave. And these waves don't happen all the time. And so there's a factor of the small wave being misinterpreted with a big wave because I don't know, unless I have some other information that allows me to hold on to the trade longer. But in most cases, I get ingrained, habituated into taking these small waves, even though the waves are humongous, which means that I get out too early, right? Missing the opportunity of a century or something like that. These professionals talk about how they're able to uh, take a single trade in a single day, okay, and then ride it to the max, and then essentially represents a whole years of it essentially represents a whole years of essentially whole years of trading because the profit attained by but based on a single trade is so humongous. So now that I have now that I have substantiated my setup, okay, which is an enhancement since February of this year, then I can enhance it towards being becoming more aware of the couple things that I've been trying to do, along with substantiating my consistency. Now that I have established my consistency, now what really will become a far more impactful is to get to the point where I am also working on reducing my losses, and then also it's and then increasing my gains by entering into the right setups. And then when I enter into the right setup, then I can hold on to it as longer to allow the expansion of the profit. So that has been an end goal essentially, right? So the end goal of trading is essentially to minimize losses and increase the amount of gains that I have. Okay, that has been the ultimate. That has been the ultimate goal, and it will be for many people, as many people. I'm practically everybody does that. I mean, that's the point. So I'm at a point where I'm doing that as well, right? So now that I have established a consistency, uh, I believe now I have achieved a consistency with small amount of size. but now I'm looking more towards increasing my size and then holding a little longer so that I can maximize each and every trade that I have, which most likely the there will be some uh, insistence on holding something that may really essentially be just a little range bound situation. And so now I'm looking forward. Now I'm looking forward to uh, looking for a bigger gains. I'm looking for it. Okay. Now this can be problematic. I've experienced this for the past 3 months. I've been trying to go from 0.5% of gain, which I found to be consistent. Then I attempted to achieve 1% per day, which I found it to be problematic because I was trying to get to the 1%, but things were not clicking together. Whether my sizing was incorrect or something like that. Um, because I have to be able to have time in order to react to a trade that goes against me, right? If I have size that's too big, it's going to really buttress against uh, the rules, and I could be in default. So so. What I'm looking forward to now is to see if I can get uh, see what I can do, see how I'm going to see how I'm going to accentuate uh, and see how I'm going to accentuate the gains, so I'm going to be actively looking for it, and hopefully while I'm looking for it, I'm not going to be hopefully it's going to work out. I mean that's the path that I'm taking. Okay, that's the goal. Okay, so today is essentially the first day of trading. It's Sunday evening. Uh, let's see how things work out this week.